You trained for the career. Now build the business. This is the Muse Spring Minute, where aspiring tax professionals learn to launch and scale their own practice. Here's your host, Jason Carr.
One of the most valuable skills a tax preparer can develop is knowing when a return is no longer just a return. Today, I want to talk about the line between tax preparation and legal risk and why knowing when to pause, ask questions, or refer out can protect both you and your client. Tax preparation starts with information. A client gives you forms, documents, and answers. You organize that information into a tax return. You ask follow-up questions. You apply the rules you've learned. You prepare the return as accurately as you can based on the information available. Most of the time, that is the work. But sometimes the facts start to point somewhere else. A client says they have not filed in 6 years. A business owner says they paid workers in cash and never issued forms. Someone receives an IRS notice and wants you to, quote, just fix it. A client asks whether they should leave income off the return because no form was issued. A married client wants to file separately because there's a dispute over income. A taxpayer says a prior preparer made things up. A business owner says they use payroll taxes to pay rent. Those moments require judgment. The first red flag is unfiled returns. If a client missed 1 year because of ordinary disorganization, that may be manageable depending on your experience and the facts. But multiple years of unfiled returns can create more serious issues. You need to ask why the returns were not filed. Were the refunds due, balances owed, business income, notices, collection activity, fear, lost records? The answer matters. A preparer may be able to organize and prepare missing returns, but if the client is facing collection, audit risk, criminal concern, or state enforcement, they may call for a referral to a tax attorney, enrolled agent, or CPA with the right experience and authority. The second red flag is missing or hidden income. This one is straightforward in principle and hard in practice. If the client tells you about income, you cannot ignore it because no tax form was issued. If the client says, "Can we leave that off?" the answer is always no. That does not require speech. It requires a professional boundary. You can say, "I can't prepare a return that omits income you've told me about." That sentence is clear, calm, and firm. The third red flag is worker classification. A small business client may say something like, "I pay everyone as a contractor." That sentence should trigger questions. Do they control the worker's schedule? Do they provide tools? Is the worker doing core business work? Is the relationship ongoing? Did the client issue Forms 1099? Did any worker complain? Has a state agency contacted them? Worker classification can affect income tax, payroll tax, penalties, state law, and sometimes employment law. A preparer should be careful about treating it like a simple box to check. The fourth red flag is payroll tax trouble. When a business withholds payroll taxes from employees and fails to remit them, the issue can become serious quickly. A client may describe it casually, "Well, we fell behind. We used the money to keep the business open." Or maybe, "We're just catching up." That is a moment to slow down. Payroll tax problems may involve collection, personal liability, trust fund issues, and direct agency contact. If you're a new preparer, this is usually a referral situation. The fifth red flag is an IRS or state notice that the client does not understand. Some notices are simple: a math correction, a missing form, a request to verify identity, a balance due notice. Others are far more serious: audit letters, collection notices, proposed assessments, notices involving business payroll taxes, state residency inquiries, requests involving fraud indicators. Do not assume every notice is routine. Read it carefully, identify the deadline, identify what the agency is asking for, identify whether the issue relates to a return you prepared or a prior year, then decide whether it's within your role. The sixth red flag is a client asking for advice about what they should say to the government. There's a difference between preparing a return and advising someone in a dispute with the IRS or a state agency. If the client asks, "What should I tell the auditor?" or "Should I admit that?" or "Can they charge me with something?" the conversation has moved into a different category. That is legal risk territory. This is where I, as a tax attorney, and I, as a MuSpring founder, overlap in perspective, while the businesses remain separate. MuSpring trains preparers to recognize these boundaries because it's part of being a professional. The law office of Jason Carr, on the other hand, handles tax controversy and legal matters. MuSpring teaches preparers how to know when a client issue may need that kind of help. The seventh red flag is a client who wants speed over accuracy. Some clients pressure preparers. They say they need the refund now. They say another preparer will do it. They say the prior year was prepared differently. They say the deduction is probably fine. They say everyone in their industry does it. Pressure is information. When a client pushes you to prepare a return before you have the facts, that is a risk signal. Your answer should stay calm. I need complete and accurate information before I can prepare the return. The eighth red flag is a prior year return that looks wrong. If you review a prior year return and see something that does not make sense, don't just automatically repeat it. Ask questions. Maybe there's a good explanation. Maybe there's missing context. Maybe the prior preparer had information you do not have. Or maybe the return is just wrong. Your job is not to attack the prior preparer. Your job is to decide what you can responsibly prepare now. So what should you do when you see a red flag? First, pause. Second, ask clarifying questions. Third, document what the client told you. Fourth, decide whether the issue is within your competence and authority. Fifth, refer out when needed. That last step is not weakness. It is professionalism. Clients do not need you to pretend every issue belongs in your lane. They need you to know where your lane ends. That is one of the major differences in attorney-led tax preparer training. A lot of programs teach forms, and forms do matter, but professional judgment matters a lot. At MuSpring, the Tax Business Blueprint program is designed to help new preparers understand the return, the business, and the risk boundaries around the work. You do not need to become a tax attorney to prepare returns. You do need to recognize when a return has become something more serious. So remember these red flags: unfiled returns, hidden income, worker classification, payroll tax trouble, government notices, questions about what to say to an auditor, pressure to rush, prior returns that do not make sense. When those facts show up, slow down. A good preparer does more than enter numbers. A good preparer knows when to ask better questions. I'm Jason Carr. Thanks for listening to the MuSpring Minute.
Thanks for listening to the MuSpring Minute. Subscribe and leave a review so other future tax pros can find the show. The MuSpring Minute is produced by MuSpring LLC for educational and informational purposes only and does not constitute legal or tax advice. For guidance specific to your situation, consult a qualified professional. MuSpring LLC is not a law firm.